Alright guys, so first it was China, then it was Canada and Mexico. Well, ladies and gentlemen, Europe is about to be officially next. As we said many times, Trump isn't going just after China's economy. The grand plan is to make America great again at the expense of the world, and that includes Europe as well. Donald Trump is threatening to impose a brutal 25% tariff on the EU, and the story gets even wilder. He believes the Eurozone was formed to take advantage of the United States, so he's going after the economies of all EU member states. Europe's biggest crisis today isn't coming from China, it really isn't coming from Russia, but their biggest ally, the United States.
The European Union's it was formed in order to screw the United States. I mean, look, let's be honest. The European Union was formed in order to screw the United States. That's the purpose of it. And they've done a good job of it, but now I'm president.
What will happen if these countries or the EU retaliate?
They can't. I mean, they can try.
So there you have it, living color. According to Trump, the EU was formed to screw the United States, and the Eurozone is helpless to retaliate. Europe has no power to affect the US economy. Understand, this is the mindset of Donald Trump. Europe has not been the best apprentice, and Donald Trump is going to fire them using big, brutal tariffs. For the EU, a 25% import tax is a big blow. It's enough to discourage US consumers to buy EU products and to just hunt out there for cheaper alternatives. Europe's cost of production is just too high. Here's how bad the mess is. Just on the steel and aluminum tariffs alone, the EU expects to take a $30 billion hit. That's a lot of money, especially for an economic bloc on the decline. The biggest loser once again would be the Germans. They export over 500,000 tons of steel to the US, so the tariffs will clobber them the most. Oh yes, their cost of production is probably the highest in Europe as well. When Trump said the EU has very little leverage over the US economy, he got a point. The EU is extremely dependent on exports to the US. Remember that the American consumer market is a tariff market built to keep China out. So if the EU loses this leverage, where else can they sell to? It's a serious problem that gives the US an enormous amount of power over Brussels. And if you're Trump, you're going to exploit these to the high heavens. In 2023, the US accounted for nearly 20% of Europe's total exports outside the bloc. That's more than their immediate neighbor, the UK. Looking at the balance of trade, we can see the EU has a positive balance of trade with the US for the longest time. In other words, they are enjoying a trade surplus because they are exporting much more than they are importing in. And this amounts to around 1% of total EU GDP. Imagine Europe's dilemma. You're already in an incredibly disadvantaged economic position. You can't accept cheap Russian gas because Putin is the boogeyman, right? Sure, you can buy LNG from US and Qatar, but that's the most expensive form of energy around. Secondly, you can't compete with Chinese products on the global market. BYD cars are better and cheaper than vehicles coming out of a German factory. So the Germans and Europe as a whole, they need the US market more than ever. And here are the hard facts that the EU can't deny. It's why Trump is confident he will win in this confrontation. He has the EU where he wants them, weak and dependent. In Q4 last year, Germany's GDP fell by 0.2%. The economy contracted as a whole. While global manufacturing continues to climb year after 2020, just look at Germany's trajectory. It's on a steady decline back to the pandemic levels. They are facing surging costs from energy bills and labor shortages as well. Let's not forget interest rates are still very high for German companies who were used to near zero rates. In other words, there's nowhere left to run for Europe. They have to iron out the deal with Trump because they simply can't survive a prolonged economic war. They have cut away any backup options with Russia, China, and BRICS as a whole. Which other market will happily lap up expensive and uncompetitive European products except the United States, besides luxury bags and perfume from France? Now, I want to be clear, this does not mean the US won't be hurt. Trump's economy buys an incredible amount of products from the Eurozone. The EU is the largest source of US imports. In 2024, US importers brought in more than $600 billion worth of goods. And when you slap a 25% tariff on them, costs will escalate for US consumers. So if you're a consumer in the United States, you will get affected. There's simply no way around this fact. And here's which states will hurt the most. Indiana has the most exposure to EU goods, coming in at 46%. Second is North Carolina, and third is Rhode Island at 39%. So yes, your cost of living would most definitely increase courtesy of the tariffs on the Eurozone. Almost 19% of total US imports comes from the EU. But understand that Trump is still playing with fire here because he isn't just hitting the EU. He's going after the entire global economy, including his biggest trading partners like Canada and China, who the US still relies heavily on for everyday goods. So is the EU totally helpless here? Not really. They still have a big card to play if they can actually wrap their heads around it and stop talking about common Western values. The US depends on the EU common market for 32 strategically important imports, and this revolves around pharmaceuticals and chemicals. And it tells us how ugly this trade war can evolve even if the EU is on the losing side. The health of Americans could get affected, and if Trump wants to reshore all industry, he cannot afford for disruption of important chemicals into the US economy. So the EU does have a card or two left to play. They could also hammer the US hard when it comes to their digital services tax. Now, Trump's economy is the world's largest exporter of services. Now, just like your Google services and Netflix, Europe could always clamp down and impose big tariffs on those which will hurt the profits of US tech giants. And we all know how charming Trump is with his tech bros. When it comes to services, the US enjoys a trade surplus of over $100 billion with Europe. And if they decide to tax that, we could see US tech giants come under a ton of pressure. Right now, the majority of the EU is planning on establishing a digital services tax rate for the entire bloc. France already has one, but they are proposing to hike it to 5%. Other countries like Denmark, Italy, and Poland also have their own DST. Other parts of Europe like Belgium and Norway also wants to impose such a tax as well. So this isn't good for the US tech economy. They are already facing an AI crisis from China. The last thing they want is tariffs from the EU on their services. But is the EU still in the right mindset? Even as we speak, von der Leyen, she wants to give Ukraine even more money, and at this point, I've given up.
I can announce that a new 3.5 billion euro payment for Ukraine will arrive already in March. Second, as President Costa just has announced, there will be a special European Council, and I will present at this special European Council a comprehensive plan for defense investment, for scaling up our European arms production and defense capabilities, but also for investment in Ukraine's defense industry, scaling up your arms production, your defense capabilities. So this will be a plan for the European Union and for Ukraine.
They are broke and they still want to give money to Ukraine. Why is Trump trying to disengage from the war? Because it's costing the US economy a fortune. But Europe still has money to give them. Really? Trump is going to play the EU like a fiddle during the tariff negotiations. But this leads us to a fundamental question. What is the future of the EU economy? It's going to be very simple. The EU will have to burn away their fiscal constraints and debt limits. They have to spend a ton of money to crawl out of this hole because there are few alternatives left. They have closed almost every other escape hatch. Let's just take defense spending for example. The EU faces an incredible bill of $3.1 trillion over the next 10 years, and that's just to expand their own militaries and to help support Ukraine. It's a big albatross on the back of the Eurozone because the US is pulling out their military support. Europe will have to find a way to pay for it, and there are no ifs or buts, but just a matter of when. And this means we are heading towards another great melt-up where big economic power starts to stimulate their economy and spend a ton of money to solve the crisis. But here's the problem. Europe will be doing it in a position of weakness where everything costs more for them. And the markets already recognize this reality that Europe has nowhere else to turn to. Investors, they realize the truth. By their own actions, Europe has trapped themselves in a fiscal hell. And that's why German bonds, especially on the long end, are collapsing, pushing yields up. The market knows Europe will have to borrow a ton of money for their reconstruction project, and investors they are demanding a higher return to lend money to EU governments. Believe it or not, the EU actually as a whole has some fiscal space to play with. The debt to GDP is only 88%. Germany in particular only has a debt to GDP of 62% because they are fiscal conservatives. Now that's way lower than the US whose ratio is well above 120%. But we all know the EU spending money is going to be very wasteful because all the fundamentals are going against them. But they are backed into a corner and there's no way out now. They are competing against China, who's aggressively stimulating their own domestic market, and they are facing a big tariff war across the Atlantic from Donald Trump. So the EU is trapped, and even the former ECB head Mario Draghi has given up. The only way left is to take on debt and spend more money.
I mean, you say no to public debt. You say no to the single market. You say no to create the capital market union. You can't say no to everything. Otherwise, you have also to admit, to be consistent, that you are not able to deliver on the fundamental values for which this European Union has been created. So when you ask me what is best to do now, I say, I have no idea, but do something.
But let's focus on what Trump wants from the EU. There's also a deeper, sinister motive we must discuss, and that's using the EU as a proxy, as a pawn to contain China's economy. Just a few days ago, the US commanded Mexico to punish China with import tariffs, and that's the deal to avoid getting tariffed by the US consumer market. And guess what? Mexico is on the verge of doing it. The president is very concerned about losing access to the US consumer, so she might pull the trigger on China. It's likely that Trump will give the same Faustian deal to Europe as well, clobber China, and we might lower down our tariff rate. Not a guarantee, but I can see such a deal coming. Now, will the EU bite? Because a lot of their own critical imports comes from China as well. Tariffing China will make them even less competitive. And as we said many times before on this channel, the biggest loser of the last 3 years is, without doubt, the EU economy. And at this point, it's just sad. But let me know what you think. Will the EU cave into Trump's demands? And is there even any way out for Europe at this point? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.